this record-setting rally and how far stocks can go? Let's ask Tom Lee. He is Fundstrat's head of research, a CNBC contributor. He's with me at Post 9 because he is out with his 2026 outlook for stocks. Thanks for sharing it with us first. We appreciate you for that. So let's get right to it. So we're going to 7,700. That's the headline. So that's a pretty decent year in the year ahead. Not quite as robust as we had this year. Why that target?
Well, we're 3 years at 20% gains because the S&P probably closes 7,000 or so this year. And so I think there's a deceleration of what the market can do next year. But that 10%, I think, belies what will be a very turbulent year, similar to this year, where this year we had tariffs and sort of a Fed that became hawkish again. Next year is a year where we have a Supreme Court potentially overturning tariffs, and then a new Fed, which will be tested. So I think we could have what looks like a bear market in 2026, but we exit strong.
I mean, even with a new Fed, and, you know, it's divided, obviously, as we learned yet again yesterday, we know from what the president wants to do in terms of who he wants to appoint that the bias is going to be towards easing.
Correct.
So why so much turbulence around that particular issue?
You're right. I think next year the real message at the end of the year will be there's the Fed put back in play. So then you have a White House put and a Fed put, which are tailwinds for stocks. But before all that happens, the new chairman has to be confirmed. It takes about 90 days from the time that his nomination takes place and the confirmation. And the markets always test a new Fed chair. So I think that is the January to October period, is that the Fed is being tested, even though we know it's going to be a dovish Fed and a Fed put comes out of that.
We think we're going to get, I mean, at least if you believe the outlook, which it's, you know, it's your own prerogative, a cut into a strengthening economy, though. I mean, at the end of the day, that supersedes everything. Isn't that partly what the last couple of days, yesterday and today, are about? Yeah.
I mean, this was in my mind, even though people positioned it as a hawkish cut, it's actually quite bullish for stocks because the Fed, again, is now weighing the downside risk to the economy, which is the Fed put coming back into play. Plus, as you know, QT ended, and even though it's not officially QE, it's the absence of tightening, which is QE.
I mean, you call it whatever you want. If the effects of whatever they're doing are nearly the same as if you want to call it QE, the bottom line is stocks went up and rates came down. Yeah. And if that continues to be the picture, it's going to be hard to lean against the equity market in that scenario.
Correct. And the right groups are responding, as you highlighted, small caps hitting record highs, financials rallying. And now what we just want is the ISM to turn. But if housing can turn, then you've got a real broadening taking place next year.